Hi everyone, welcome to the Buffett and Beyond Weekly ETF video letter, and this is Saturday, July 1st. Happy second half of the year, folks. And we're going over the IYT, which is one of the transportation ETFs. And remember, folks, that transportation is one of the leading indicators in the market itself. If transportation is not working, the market is not working. So it's a leading indicator, and we're going to take a look at this very nice setup that we have going here. All right, and remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And let's look at some ETFs that we looked at last week and see which ones are leading, because we're having a nice little rally in the market, in case you haven't noticed, as the S&P jumped off its 20-day moving average and the Dow jumped off of jumped above its 50-day moving average. So the markets are reacting to that, reacting to the end of a week in a month, reacting to the new week in the new month, reacting to a 3 or 4 day holiday, depending how many of those days that you take this weekend. So anyway, let's see what's going on with the rally in the market. And the consumer discretionary over here is doing very, very nice. It jumped out of its doldrum here, which it looked like it was topping out, especially when you look at this indicator down here. Sure looked like it was topping out and going down, fooled everybody, but then all of a sudden the market woke up. Let's look at the healthcare, which we looked at last week, and we looked at some nice stocks in that healthcare sector, and yeah, it jumped up, boy, and it came down. Blue line 50-day moving average, red line 200-day moving average, came back down, bounced off that 200-day moving average big time after it tested it 3 other times. So that this right in here was the 4th time it was tested in a row, and then all of a sudden took off with this latest market rally. And you can see this indicator looked like it was turning down here and then all of a sudden turned back up. Let's look at this consumer discretionary. Same type of thing, folks. It broke out of its topping action in here to the upside, which is very surprising. And then we have the materials sector, same type of thing, looking good, bouncing around, giving no indication of which way it was going, except for the intermediate term indicator down here. Never did give a sell signal, and then all of a sudden popping up. But you could see on all of these that we are overbought in this market, no matter how you look at it. And let us look at the transportation index, and that's why we're here, folks, this week. And we can see this thing is just moving up very, very nicely. Here's the 50-day moving average. Here's the 200-day moving average. Here's the intermediate term indicator, all pointing up. Very, very good. Now we're going to look at some neat stuff relative to the S&P 500. Now, year to date, black line is the S&P 500. The mustard-colored line is the transportation index. And you can see it has been following all along. And so the transportation average is agreeing with the market. And some of you may say, well, the market is agreeing with the transportation average. But if that transportation average doesn't go up, and remember, transportation measures the transfer of goods back and forth. So if goods are being sold, then they have to be transported from where they're made to where they're being sold, and people have to come in and buy those, and they need gas, they need trucks, they have to buy those items. So that's why transportation is a leading indicator. If goods are not moved, they're not being sold. Now let's look over 5 years, and this is very, very interesting. And boy, it was something that I did not catch. Now look how the transportation average again, or I should say ETF, not average. The ETF is following the market up and down, up. But then in 2021, as the market was reaching new highs, see this whole area in here is 2022. This is 2023 that we're in. But 2021, this market was going. And look at the transportation average for a year. For a whole year, it did not reach a new high while the market was reaching new highs. So this is something we all have to take a better look at as we go along, or more of a constant look at as we go along. Then transportation was coming down, the market was coming down as was expected, and then we got this move up in the market, and this is why this last move was not trusted, because number one, it was not being followed by some of the other indicators, and it wasn't being fired by or followed by the transportation ETF. And then all of a sudden, bam, it took off. So now we have some kind of confirmation in here as to this rally may be for real, finally, and we'll see how this works. But we're here to look at some stocks that are top 5 stocks. Remember, we take 5 or 6 or 10 stocks out of an ETF, the best ones, according to their clean surplus return on equity. And our whole theory, which is proving to be pretty much fact by now, the whole theory, first it was a hypothesis, and then it became a theory because it was proven out time and time again, and then fact is if it's always correct, or mostly always correct. So we want to be able to pick out 5 or 6 or 10 stocks in each ETF to see if it outperforms the ETF itself. So here we are with the top stocks in the IYT transportation average, and as of this was Wednesday when I got these numbers, the IYT is up 16% while the S&P was up 13%. Now they're both up a couple of more percent by the time that you read this. Now let's take the top 5 stocks that we picked in this ETF, and you can see by the ROEs they're all above 20%. And those of you who have been following us know that to get into our growth portfolio, we want to see a clean surplus return on equity 20% or above. So we have the 5 stocks with ROEs higher than the 20% threshold. They are up this amount. They are up a total of 27.6%, while the S&P is up 13.9%. Again, this was as of a couple of days ago. And the IYT transportation ETF up 16%. So the top 5 stocks once again are proving that they are way ahead of the S&P 500 index itself, and pretty much way ahead of the transportation ETF itself. So here's another case where the top 5, the top 6, the top 7 stocks, depending how many stocks are above the 20% ROE, where those stocks are outperforming not only the ETF but also the S&P 500. Now, when we look over 5 years, had we gone back, now we're back testing here, those 5 stocks, and we're going back 5 years, how have they performed? Well, the black line is the S&P 500. It's up about 55% over the past 5 years. Now, when you take these 5 stocks and you average them out, they are up 154%. So in other words, the top 5 stocks, as we're looking at them today, when we back tested them, they are up 3 times more than the S&P 500, up almost 4 times the IYT, the transportation average, which is not on this chart, up almost 4 times the transportation average itself. And we have 2 big winners here. Well, if you're up 110%, 115%, and the S&P is up 50%, even this stock down here is way ahead of the S&P 500. So once again, we show that it's better to take your time, pick out the best stocks, and that's what we do in our research. So those of you who do subscribe to our research get these stocks, and yes, you're way outperforming. And don't forget that the ETF that we didn't go over this week was the semiconductor ETF, and folks, it's up 75% as of this morning. So that's a big move. 75% is a big move for 5 years, let alone 6 months, the first 6 months of this year. So yeah, you want to be able to pick the best stocks in the ETF, and that's what our computer program does for us now. We used to do it by hand, but now we have a computer program. So folks, remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And we have a few ways that have been working over the past 21 years very, very well. And of course, this is all preceded, all these model returns are preceded by research, a doctoral dissertation, and then a book, and then a second edition of a book. So there's a lot of history behind the methodology that we're using, and you folks reading this are keeping up with it. All right, folks, you have a great weekend. Stay safe, and we'll be back here next week.